In 2026, the world of finance is being rewritten. This isn't some quiet, behind-the-scenes update. We're talking about AI systems running entire workflows at our biggest banks and new forms of digital money settling transactions in seconds, not days. Most people will be left scrambling, but a small group will see the single greatest financial opportunity of our generation. The financial world you thought you knew is already a museum piece. Technology, regulation, and our own behavior are hitting all at once, creating a perfect storm of disruption. For the unprepared, this will feel like a crisis, but for those paying attention, it's a once-in-a-lifetime chance. Today, we're cutting through the hype to break down the 4 most transformative trends defining the year. First, AI isn't just getting smarter, it's getting a job. We're seeing the rise of the autonomous AI agent, the new digital employee. Think of an AI that's a new specialist on the team, embedded in a bank's core operations. Imagine an agent that acts as a hyper-efficient concierge, proactively seeing you're eligible for a mortgage refinance, automatically gathering the documents and guiding you through the whole process. This is becoming operational reality, with financial services set to spend over $600 billion on AI by 2028. But the conversation has shifted from what's possible to who's accountable. The Wild West days are over. These digital employees need identities, permissions, and oversight. The real advantage isn't just having AI, it's having responsible AI. This means repetitive jobs are disappearing, but a massive demand is opening up for people who can design, manage, and oversee these systems. The second megatrend is the rewiring of money itself. For years, digital assets were about speculation. In 2026, it's about infrastructure. The key concept is tokenization. Instead of one physical deed to a skyscraper, you can create thousands of digital mini-deeds on a blockchain, each representing a tiny fraction of ownership. This isn't about hype coins, it's about making real estate, stocks, and bonds more efficient and accessible. We're moving from pilot programs to production. The DTCC, the master bookkeeper for the US stock market, is already running a new digital ledger in parallel with its classic one, a clear signal they're building the plumbing for a tokenized future. This wave is supercharged by stablecoins, the reliable poker chips for this new digital system, allowing for instant 24/7 transactions. For investors, this could democratize wealth through fractional ownership. Third, a huge wave of consolidation is redrawing the banking map. After a slow period, mergers and acquisitions are back in a big way. What's driving it? First, the race for scale. The cost of AI is massive, so banks are buying competitors to spread those costs over a larger base. Second, a unique regulatory window has made striking a deal more attractive. But here's the interesting part. The financial food chain has been reordered. The mid-sized banks, the fish that used to eat smaller fish, are now takeover targets for the sharks. This shrinks the pool of buyers and puts immense pressure on smaller lenders to merge just to survive. For consumers, it's a double-edged sword. You might get a slicker app, but you'll see fewer local choices. For investors, it's a clear opportunity. The final trend is a revolution in our own financial behavior. Digital-only neobanks are finally growing up. Their success isn't just about low fees anymore. The battle is being won with AI-driven personalization and seamless embedded finance, putting huge pressure on traditional banks. At the same time, we, the consumers, are changing. A trend exploding on social media is loud budgeting. Personal finance is coming out of the shadows. What used to be a private conversation is now a public declaration, like posting workout goals. This transparency is creating more educated and demanding consumers who are also seeking stability in products like CDs. This combination of digital-first banking and a more conscious consumer is forcing the entire industry to level up. These 4 trends aren't separate storms. They are tectonic plates shifting beneath the entire financial world. An AI workforce, the rewiring of money, a consolidation wave, and a consumer revolution. These forces mean the old playbooks for building wealth are obsolete. Staying informed is no longer a passive activity, it is your primary defense and your greatest offense. The gap between those who see this future coming and those who don't is going to widen dramatically. The future of finance isn't going to wait for anyone. The time to prepare is now.